Welcome to Simply Money. Today we're going to be looking at something a little different than prior videos. We're going to start looking at some examples of ETFs and how the dividend grows. I've talked on this in prior videos and shared the dividend growth and the snowball effect that it has, but I want to take individual ETFs and I want to show you a breakdown of the impact that it has and the growth factor. I want to look at some different ETFs. We're going to look at today JEPQ or JEPQ, covered call ETF, very popular with a monthly dividend payment, has a lot of growth potential. We're going to look at, in other videos, we'll look at SCHD and VYM, DGRW. If there's a particular ETF or even a dividend stock you want me to run this on and show and do a video for, leave me a comment down below. I'd be glad to go ahead and input the information from that request and do a future video for you. It's something I enjoy doing, looking. It's part of the way I evaluate a stock, or I should say an ETF. I'm real big on ETFs, index funds. But I wanted to look at JEPQ because it is very popular. It provides a lot of monthly income. Before we get into that, I want to remind you, if you haven't set up a budget, you need to get on a budget. Don't forget to check out Pocket Guard. I'll throw a link into the comments below where you can access Pocket Guard. They have a free version. They also have a premium version where you can use this to budget. You can set up a bill payment plan, a debt repayment plan, all sorts of great tools. Check out the playlist on the Simply Money channel on Pocket Guard playlist. All sorts of videos that explain it, take you step by step, show you the pros and cons of it. I highly recommend it. But today, on this video, we're going to look at JEPQ. We're going to look at this particular fund if we had bought into it on September 1st on 2022. This is an example that I wanted to give you, and we'll be using similar examples in future videos. As you can see on my screen here, we bought JEPQ on September 1st, 2022 with a $50,000 investment. We could run this in any scenario. You could do it with $100 initial investment with continue investing monthly for dollar cost averaging. I'm just doing a $50,000 lump sum investment on this particular day just to see how, never touching it again, how it grows and the impact of the dividend. On this day, we put in $50,000 into this one fund. The price at the time was $45.64. That allowed us to buy 1,095 shares. That comes out right at the $50,000. So as you can see, we'll start looking down. We're going to look at the date that the dividend was paid and then the reinvestment into the same fund. So the date that they pay you a dividend, we take that amount. The DRIP is automatically set up in your account. You don't have to do this. It automatically reinvests and buys more of that JEPQ stock or index fund. So we'll see the transaction. They're all on this one going to be a dividend. We're doing nothing else. We're not adding to this 50,000. We're just letting it ride. You'll see here the dividend per share, how much in dollar amounts were paid per share on each of these dividend dates. We'll see the dividend payment, how much this dividend per share multiplied by however many shares you own at the time will give you your dividend payment. Then we'll look at the stock price. And I'm going to fix that real quick because that's bothering me. We're going to do a quick wrap here. There we go. We're going to see the stock price on the day that we bought the dividend. And we'll see how many we can buy by knowing the stock price and how much we earned in the dividend payment. We can now see how many new stocks. I'll say stocks, even though I mean index fund. I apologize if that's confusing you. We'll see how many more of that fund we can get. And then it'll show us our cumulative quantity. So this initial amount plus the new amount from each dividend will give us our running total. And then what the total value is. That's going to be based on our quantity of cumulative stocks and the current stock price. Let's go down this. The first, again, we invested on September 1st, 2022. The first dividend was paid on September 7th. And that was, as you can see, 54 cents per share. Since we had 1,095 shares, our payment was $591. the stock price hadn't changed much. And so that allowed us at dividend reinvestment, which is called a DRIP, D-R-I-P, dividend reinvestment plan. You want that on unless you're living off of your dividends. Dividend reinvesting that's taken this $591.30, buying as many shares at this price as it can. So we've got almost 13 new shares. So now our quantity of shares that we own is right here, and our value, as you can see, went up slightly. We're going to just skip down here a few. We'll go down to June of 2023. As you can see, the payments on the dividends have been fairly regular. They've dropped a little bit. They went up here in November. They've dropped back down. But you can see the dividend payment goes up and down a little bit, but it's fairly consistent. $591 down here to June. We're at $425 per month. Again, this is off your initial investment of $50,000. You're not doing anything, adding anything. It's just continuing to build and grow. And as you can see, it continues to, price dropped here in 2022. We all know 2022 was a little bit of a rough year. The prices of this fund dropped down, but then it started coming back a little bit. We got actually above where we began. So you can see in June 2023, you can see all the different amounts that each month we're able to buy more stocks. So every time we got this dividend, we bought more, 9.5, 18, 14. So here's where you can look at, let's look at November. The price dropped $5 per share. But what does that mean? We got a higher dividend payment, but we also were able to get, because the price is lower, we're able to buy 18.5 more shares because the price is low. So sometimes, especially during the long run, some of these dips are great because it allows us to buy more quantity. We get down here all the way to June, you can see our dividend payment for that month was $425. The price of the fund has gone up now from its original price, and we're able to add 9 more shares to that. And now we're up to 1,224, we'll say 1,224 shares. As you can see from the beginning quantity, we've actually gained about 129 shares into June. And our value has gone up about almost $8,000 from its original amount. So we've gained value of our overall portfolio on this fund, and we've gained more shares. This is a great way to build the number of shares that you have in a fund. So we're going to skip down a little bit further here, and let me scroll down here past that. Now let's go to the present, March 6, 2024. The latest dividend of 38 cents. Again, that equals about $500. You can see here the price has gone up now. We've seen some raises going since the $47. It's gone up. It dropped a little bit, and it started going back up. So we're seeing some increase now as the market in early 2024 has recovered. And we're seeing, I shouldn't say recovered, but some stocks have really recovered, especially the Magnificent Seven, which is really driving the S&P 500 and the entire stock market. But this is seeing some positive gains now, and we'll see this over the, if you long term, that's what you're investing for, over the next 10, 15, 20 years, however long your horizon is, you'll see these prices going up and down, but long term, this will go up. And see the number of shares that we've increased each month by adding that drip. Now we're up to 1,300 and say 15, so 1,315 shares. And you can see our value now is at $69, almost $70,000. It hit $70,000 last month. The price dropped slightly, but we've gained a significant amount of number of shares. So this is the wonderful thing, as you're investing and this is growing, the dividend snowball is growing the number of shares you have and the value of your portfolio. If you look down at the bottom here, the total dividends that have been paid over this, I think it's been 17 months that we showed here, you've added $10,000 that dividends have been paid to you, reinvested them, and that's these number of shares that you've gained, 219, almost 220 more shares of JEPQ. The share price from its original, what was it, $45.64, up to $53 now. So in that time frame, you've seen a 16.32% growth in the share price. You've added these shares, that's your total number of shares, and this is your total gain. This is the value of that portfolio now. So you could do this for 10, 15, 20 years, and then say you're ready to start living independently, quit your job, your part-time job, you retire, whatever the case may be, and you shut that drip off. This value isn't going to change a ton in JEPQ, but what you're going to have is now you have this income every month that's coming in. Or you can sell this and put it into a more growth-oriented fund if you decide to do that. You take your capital gains. I recommend whatever you're invested in, you keep it long-term. And then when you get closer to retirement or growing independent, that's where you want to diversify, reduce your risk, whatever the case may be. I'm not saying, again, suggesting to go buy JEPQ. I am saying this is just a scenario of how it works on a monthly dividend. You get paid every month. And I believe we'll see this start going back up again. We'll also see this price rising some more. Let's say another 16, 17 months. Or maybe we add another 20, 30,000 to this. Who knows what the market's going to do? We don't know. We have to ride the ups and downs. Remember, when you have the downs, like here in November, you're able to get more shares because the price is lower. So as the price comes up, you're getting fewer shares, but you're still adding to the value of your portfolio. The next video we'll do on this same topic, I have it already right here, SCHD, a quarterly pay-in dividend ETF. One of the favorites out there in the YouTube world and in the investing world. We'll look at how that one has performed over the last, I believe we're doing 9 years, maybe 7 years on that one. Then you'll see that. So hit the like button if you find this useful, if you find this interesting. Don't forget to subscribe and hit the notification bell so when I come out with this SCHD video, you'll be notified that it's ready and you can see how SCHD has performed in a similar manner and how that dividend snowball is really powerful. Thanks for joining us on Simply Money. Send me some comments. Give me your thoughts on this. What do you suggest on a video on a particular stock or ETF that you'd like to see the dividend snowball impact? Thanks again, and we'll see you next time.